The Fed rate is important because the Fed rate is what the banks borrow money. The Federal Reserve, I don't know if this looks like a printer. They have a printer and out comes money. So then they let the banks borrow money, right? And then the banks let you borrow money. And then when you're paying back the money, you're paying back the bank, but then the bank sells the debt that you have over to investors and they sell it in securities or bonds. And so this is what follows mortgage rates, is really the bond market.
Okay.
So the bonds follow something called inflation, and inflation is what really correlates to mortgage rates, because you can't have a bond rate at a lower rate than inflation. Inflation in 2021, 2022 was almost at 20%. Since COVID, we experienced 40% inflation. So that means if you had $10 in your bank account and didn't have it invested, it's now worth $6. And so the reality is we just went through the worst recession we've ever been through, and no one's talking about it because what we went through was something called stagflation.